Are you working hard to save money but feeling like it's slipping through your fingers? You look at your savings account but it feels like it's not keeping up with the ever rising cost of living. If you think you'll start investing later, when you're older or earning more, you're making a mistake that could cost you years of potential growth. Here's the truth. If you leave your money sitting idle in a savings account, you're actually losing money to inflation. Your money isn't growing, it's shrinking. But there's a better way, a smarter way. And no, you don't need to be a financial expert to start. Let me introduce you to the world of mutual funds. It's simpler than you think, and it's the gateway to long-term financial growth. So what exactly are mutual funds? Think of them as a collective investment scheme where a large number of investors pool their money together. This pool is managed by professional fund managers who know how to pick the right stocks, bonds, or other assets. You don't need to know the ins and outs of the stock market. They do that for you. Your job is to pick the right mutual fund, invest regularly, and stay patient. Now here's where things get interesting. Not all mutual funds are the same, and not all carry the same level of risk. Mutual funds in India come in three main categories, each tailored to different kinds of investors. 1. Equity funds. If you're someone who can handle a bit of risk for the chance of higher returns, equity funds are your friend. These funds invest primarily in stocks, which means they can be volatile in the short term, but often outperform other investments over the long term. Remember, higher returns come with higher risks, so this option is ideal if you're willing to stay invested for the long haul. It's perfect for young investors like you who have time on their side. 2. Debt funds. On the other hand, if you prefer stability, debt funds are more your style. These invest in fixed income securities like government bonds and corporate debt, offering safer, more predictable returns. Debt funds are great for those who want a steady growth without too much risk. 3. Hybrid funds. Can't decide? Go for hybrid funds. They give you the best of both worlds by combining stocks and bonds. This balances out your risk and offers more stable returns over time. The right fund for you depends on your risk tolerance. But don't worry, we'll help you figure that out. I know. What about risk? You're probably thinking. The word itself can make you want to back out. But here's the reality. Risk is a part of every investment, and understanding it is the first step toward making informed decisions. But here's something that might surprise you. Risk isn't necessarily a bad thing. It's what gives your investment the potential to grow. When you're young, you have a unique advantage: time. You can afford to take on more risk because you have years ahead to recover from market downturns and benefit from the long-term growth. Fear of risk shouldn't paralyze you. It should make you think smart, plan ahead, and choose investments that match your financial goals. Remember, it's not about avoiding risk, but managing it. And now for the part that gets most people excited: compounding. This is the real magic behind investing, and it's especially powerful when you start young. Compounding isn't a quick fix. It's a long-term strategy. The more time your money spends in the market, the more it can grow exponentially. It's like planting a tree. Water it consistently, and over time, it grows into something much larger than what you started with. If you're thinking about waiting until you have more money or more knowledge, think again. The earlier you start, the more time you give your money to grow. Even small amounts invested regularly can add up to a lot over time. There's no perfect time to start, but there's always a wrong time to wait too long. Whether you're in your early 20s or approaching your 30s, this is the time to take advantage of compounding and give your future self a financial head start. Mutual funds aren't just for the rich or the experts. They're for anyone, for you who dreams of financial freedom. Don't just save, invest. Start your journey today. Be patient, be disciplined, and let the power of compounding work its magic.